Excerpt of that exclusive conversation that Ayesha had with Shankar Sharma of First Global, speaking about the decisive mandate this elections, what it spells for Indian equity markets, the upcoming budget, stocks and sectors that he's wary of, and lots more. Remember, you can also catch the entire interview at 4 p.m. today.
I think the real reason is simply it's not a confidence issue, it's not a perception issue, it's a genuine data problem. Companies after companies are telling you that things have never been so bad in, let's say, a 15-year period, barring a few months of 2008, which was, we all know, was an exceptional period. So shorn of that, this is the worst corporate level economic crisis. There's no macro crisis, okay? So it's not like India going bust like 1991 or anything of that sort. But at corporate level, this is a serious crisis. Let's not sugarcoat this. And that is why the markets are, despite the headline indices doing well, everybody is feeling that, hey, there's something seriously wrong here.
What's at the core of the problem? The fact that for the last 2 years, we've been waiting for an earnings recovery, which has completely missed us. I mean, it's like, mere Karan Arjun aayenge, and then, they haven't come quarter after quarter. You keep waiting for a recovery and it's not happened. What's the core issue?
No, I don't think, look, okay, so the corporate earnings recovery was supposed to have started in 2014, not in 2018. We have been now waiting for 20 quarters, actually probably 22 quarters. So that's not happened. But that's not happened because the underlying corporate economics are terrible. I mean, you don't see companies like Maruti flounder like this. It's just unheard of. Or you just saw Godrej Consumer talking on your show, on your channel, that things are gloomy. I mean, these words
never propped up.
I mean, I haven't heard companies of the kind that serve your daily lives, like a hair oil or a toothbrush or toothpaste, talk about recession, talk about depression, talk about gloomy outlooks. These words don't belong to these sectors. Why are they talking about it? So it's not a crisis of confidence. It's a genuine crisis. The problem is, I don't think anybody really is interested, because I think people have kind of made up their minds that, look, what matters is a certain kind of politics. We have got that politics, and the rest of it is a sideshow. So GDP growth can be 5.8%, while in reality it might be even maybe 2% point lower. But
unemployment can be at 40-year
unemployment
high.
can be anything 50-year high or whatever. I don't think it matters. And because the mandate is so overwhelming, it probably then tells the leadership that, look, we don't need to necessarily get too fussed about this problem. This will get resolved one way or the other. Because once you get a certain mandate, I think that itself then tells you that people are okay. Ayesha Faridi may not be okay, Shankar Sharma may not be okay, but we don't matter.
Now that we have that mandate, can it trickle down to any sort of economic demand revival at all? Or is it going to completely be disconnected when it was in selection period and now execution period as well?
Well, there are many examples in this world where strong mandates may or may not translate into very strong economic growth. I mean, I'm not saying it will not here. We are all hopeful people, because if in India, if you don't have hope, I don't think you can remain alive. But political mandate may or may not translate into real economic growth. We've seen that in several countries. I'll not mention those countries, but sure, plenty of data supports that view. The other point I have believed is the markets, and I tweeted this before the election results, I think 3 weeks before, that look, irrespective of what happens, the elections will be a sideshow insofar as stock markets are concerned, because the economy is really stalling. It's hitting a stall speed right now. And that is what is going to drive markets. I'm talking broad markets, not the Nifty. Sure. And elections have come and gone, but we haven't seen the elections really, the 303 seats,
bring any
kind of big blowout bull market in India. If anything, we are trading water more or less, while the broader markets have been extremely weak. In fact, India has gone into an underperformance trend since the election results came out. Barring a pre-election upswing on the relative strength, of the relative strength comparative of India versus EM and developed, now they are actually trending down. So post-election, we are actually weaker than global markets, because markets will be driven ultimately not by sentiments of politics. It will be driven by economic sentiments and economic data, and that's not looking pretty at all.
So what can help revive the economic data? We've got the budget in the next 2 days. Is there anything that the government can do without having any elbow room on the fisc? Maybe take that hit on the fisc and try and give some sort of sops to sectors, some stimulus that the economy really needs right now.
Well, you do need stimulus. I don't know how much of money is left from what the government took by way of dividends, and I do believe there was a very nice analysis in the newspaper which said that even the 5.8% that we saw in the last quarter of GDP numbers was overstated to the extent that some part of this growth came because of spending by the PSUs. So the government got the PSUs to do spending. The spending then belongs to the PSU because they took debt to fund those expenditures. But the growth part has been reflected in the GDP. So it's like let's throw a party. You will fund the party, but everybody going to say Shankar threw a great party, but the cost is all yours. That's the equivalent example. So actually, if the government had taken those expenditures on its books, then this 5.8 itself would not have been 5.8. So now there is a lot of these kind of things you've had to do to even get to 5.8. So Indian budgets are always constrained fiscally. I mean, from the time I was born, I've always heard that no elbow room and fisc is tight, blah, 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 blah. I mean, I'm hopeful that they'll find some rabbit out of the hat. The mitigating factor is a lot of the PSUs have been the dividends, etc., have been taken away. So there is not much cash availability that you have right now. And probably a lot of it has been spent on election or election-related programs. So incremental fresh money, I don't know from where you're going to find it.
So privatization, disinvestment is not an option.
But who's going to buy all this? I mean, LIC cannot be the sole buyer of all your divestment programs because that is all really just optical passing the parcel.
So how is this all of it tying into market? I mean, what happens to the market? Will it continue to be those 4-5 stocks which will lead you, or is it now time to even take a step back that will these 4-5 stocks continue in the top rung or not? Is it that time?
You have to ask that question. If you're a prudent investor, and look, narrow bull markets can last some time, and they can confound logic, but narrow bull markets almost always end badly. Almost always they end badly because this is a classic that the market starts out broad and then slowly the leadership changes to a ever narrowing set of companies, and that's exactly where we are now. These things don't have good endings. I don't know when these things end, but they always end badly. I don't think there's any exception in the history of markets where narrow bull markets went on to give you 20-year kind of returns. They have, and I'm not saying the permanent end, but the end, whenever it happens, will be very, very brutal.
So you're challenging the growth prospects of a Bajaj Finance, of an HDFC Bank, and maybe now some of these new corporate banks.
Okay, so I think, and I've always said this publicly, the Bajaj Group is the best corporate group in India. They have run every single business very wisely. And it has escaped the NBFC crisis largely because it's got a big retail play and not a wholesale.
Small ticket, yeah.
Yeah, small ticket. And hopefully in small ticket, the defaults don't add up very quickly to 5-10%. Although I remember in subprime, that's exactly what was talked about.
That's exactly what I was thinking about. I was just recalling a scene from The Big Short in my head.
Exactly. So, fingers crossed, we should not start saying these things. But, I'm sure, I have a lot of respect for Sanjeev Bajaj as I do for Rajiv Bajaj. And I think they probably know this. But remember one thing, in India, any kind of retail lending, by and large, is to a very narrow set of people because the organized pool of salary earners in India, I don't know what the data is. I don't think it can be more than 1 crore of people because you have 2-3 crore taxpayers out which they are self-employed, etc., etc. So whittle it down further to 50,000 rupees and above because that's where you will probably start to have comfort in terms of lending. I don't think the number is more than 50 lakh crore people. That's a very narrow set of people. You will exhaust that in no time. And then you start going downhill in terms of your quality of the borrower, quality to the cities where you're going to lend. If you go to, I remember I used to be in city 30 years back and in Delhi, and I'm not, thank God I was not in the consumer lending business, but I had friends there. and they were going around giving, two-wheeler loans and Maruti car loans in Badlands of Punjab. It was all a write-off. I mean, they never got it back because when they used to go and ask for the money back, they would get a shotgun shown to their face, that buzz off. So it's a difficult business. So when you start going up country, that's a credit quality problem you will inevitably encounter. So I'm not saying Bajaj Finance will get there or it's going to get there. I'm just saying...
But it's a risk.
I think it's a genuine risk for the overall sector. The other problem is NBFCs, in my view, drove last, let's say 2 years or 3 years, the NBFC boom, 3 or 4 years, right? It drove I don't know what the data actually is, but I think anecdotally it drove a large part of your consumption part of the GDP. Because there was no real wage growth in India worth the name, but yet consumption was what kept GDP even optically 6-7% wherever.
Yeah, the fact that it was a zero-cost EMI made you buy that next phone of yours.
Made you spend.
Yeah, true.
Right? Moment that starts to get unbound, it has gotten unbound, which is when exactly if you see the slowdown in terms of auto sales, two-wheeler sales, consumer sales, GCPL, Godrej Consumer, Lever, connect that to the NBFC bust. I think there is a link, however tenuous it might be, that consumption has been impacted by the lending stoppage by the NBFCs. And I don't think NBFCs are going to be lending
coming back anytime soon.
It's a classic problem. I was having a cup of tea with a very old friend of mine running an NBFC, and he said that, look, and this is about a year and a half back, and he said, look, it's a good business because it's not regulated. Or at least it's lightly regulated. It's not really regulated in a way a bank is regulated or even a broker is regulated. We are highly regulated by our respective regulators. NBFCs were an animal in the jungle which really nobody really bothered about.
That too could come soon.
No, so that was a year and a half back, and I said, don't talk so soon. And year and a half later, you're now staring at a whole slew of regulations for this industry, including liquidity ratios and all that, which will then curb your ability to make money.
But Shankar, I understand you don't have lending, you will not buy that latest phone in the market, you will not maybe buy an expensive car. But your toothpaste, shampoo, soaps and all you will continue to buy. Why is it that there is even a crunch and a demand slump
You will
there?
downtrade, which is exactly what Dabur said a couple of days back. That earlier the price point for a toothpaste was 20 rupees. Now we are all at 10. Hair oil was 20, we're at 10. That's what the problem is. Whether in package size or in terms of a lower brand
quality
or perceived quality, or maybe, we don't know, sitting in the big cities in India, you don't know a number of small regional brands who can come in and give you a toothpaste that will look like a Dabur Red or, whatever.
Whatever have you.
And give it to you for like almost nothing. So maybe those kinds of companies will do better than the mainline companies. So Dabur's hit the nail on the head saying that's just simple down trading. So you will still buy the toothpaste, but you will not buy a larger pack and you may buy a lower variant itself. 10 rupees, for a toothpaste, hair oil, that's where you are after so-called great growth.
So, on the other subject that you were talking about, autos, are we in a structural slowdown or is it just a cyclicality nature because of all the parameters that you talked about are indicating a slump? Can autos revive anytime soon?
Looking at a 30% cut, it looks very difficult because then you're looking at a 50% rise to just, or thereabouts, to just come back to where you were. That's the kind of headroom that has been created that you need to now grow to. So maybe, and the other thing, of course, is auto four-wheelers is one thing, auto two-wheelers is another thing. And on two-wheelers, the government's diktat that 2025, all electrified. We all know the kind of reactions that has gotten from the industry leaders. And it's a huge employer. And there is no network, there's no infrastructure available to support that kind of electrification.
And who's going to lend them the money for the kind of capex?
Capex. And then the other issue is the whole tech of electric vehicles versus an internal combustion vehicle is completely different. The moving parts are probably like a 20th. That means, do you need so many ancillaries? Therefore, do you need so many people? So we need to think through all these steps before we simply say that, look, just stop by 2025. But if the government is serious, as it appears to be, then I think the sector is in even bigger trouble than just a normal demand slowdown, because it's a whole tech shift. Your whole business model is being disrupted. And the disruptors are going to be, guess what, from where?
Globally.
No, China. So BYD has announced plans to come into India, very conveniently following this 2025 directive. So you will give away your industry. Auto industry is the sole manufacturing excellence industry that we know of. There's no industry where India is respected in manufacturing. IT is IT services, on the manufacturing, autos, right? And you're going to give it away, just like that. Huge employer, huge brand builder for India, low cost manufacturing destination, and just you're going to hand it over to the foreigner.
So as an Indian equity investor, I know people like you have an option to invest in other countries, but as an Indian equity investor, what is it that you do? Just pull out all your money, sit on cash, wait for someday that you get an opportunity?
Yeah, you can't even put them into FMPs now, no?
Yeah.
so,
FDs, I mean, is that the only way to go?
Well, again, FDs, depending on the bank. So yeah, it's a very, very troublesome situation because real estate isn't doing well. Gold has suddenly perked up. Suddenly, yeah. I mean, that's very recent. We don't know how sustainable that is, but real estate is gone. Fixed income looks dicey. And equities don't look as if they're going to give you even flattish returns, let alone be hugely positive. So stuff your money.
For the next 1 year, 6 months? When?
Looking at the kind of slowdown we are in, I mean, I don't think this thing can get resolved so quickly as we might have believed. A couple of years back, we were probably more optimistic. I think as time goes along, your companies have not changed their tune. Most people are optimistic. I mean, so... Hopeful. But like I said, that Godrej Consumer on your program half an hour back didn't sound at all optimistic. They sounded a lot more pessimistic than what they sounded a year back.
Yeah, we've never heard that kind of language from them ever.
Correct.
Were you just saying that the best option is to stuff cash under your mattress? Did I cut you there? Okay, not really allowed.
Diwan Housing was doing housing finance. I remember I used to know the promoter, I mean the original owner.
Sure.
Okay, who's the parent of the current owner. I have very fond memories. A very nice gentleman. He's unfortunately no more. He used to do some business through us as well when I was a sub-broker in 1990. He and HDFC would have been like the initial 2 or 3 companies.
Guys,
now you have 82 companies doing housing finance. In a wafer-thin margin business, 82 companies, what are you going to be left with? You will have these kind of problems. So you will juice up because on retail lending, you'll have no money. So you'll juice it up by giving some part of your loans to builders. And I've never seen anybody make money lending to builders, boss.
Yeah, definitely not today. So, I mean, net, if I were to just draw a conclusion to this interview, you're saying that we're waiting at a point where we're just waiting to call it bust for us in terms of an equity
The good thing about India is there is endless series of events. So first we had the election, so we kind of went on hold for 6, 7, 8 months.
Yeah, but there's only that much that we're going to drag along, right?
Right, then we have the budget.
We will hit the dead ends at some point.
So then we have the budget 2 days later. We'll reconsider what we think later. No, we have some...
Kuch na kuch
hota rehta hai na.
But the market will bear its repercussion.
It already is. And look, I mean, nobody has a magic wand here. When markets don't do well, we all lose money. And nobody likes losing money. But, unfortunately, I don't see an easy, quick end to a larger corporate India problem. I just don't see it.
You're invested in some of the chemical companies as well, if you still hold those positions. Most of these stocks are sitting at life highs right now. Is that a safe pocket? If someone were to deploy fresh money, can they still do it? Nahin, I'm not. I'm also wearing black. You're also wearing black. Nahi lagegi. But yeah.
No, I mean, we stumbled into this trade 2-3 years back. There was no great brains or smartness because we got speaking to companies and, broadly the theme we were picking up was this. And, if you look at an Atul or a Vinati or Aarti, I mean, like just...
plethora of them, yeah.
Off the charts. They are expensive. They are now 30 plus times earnings, which for chemicals appears a bit high. But, I mean, they have good visibility. And incrementally, I've been picking up, that they might benefit. Again, no names. I'm just saying on a broad sector basis, the trade war might end up benefiting these companies because earlier a lot of chemical capacities from US MNCs would go to China.